Very good morning to everyone present here today. Hope you all are having a pleasant day ahead. So welcome to the first Bursa IR4U webinar of 2025. We are very honored to have Wong Chew Han joining us as speaker for today, whereby she is currently the co-head of Malaysia Equity Research at Maybank Investment Bank. Chew Han will be presenting on the equity outlook for 2025, as well as 5 key investment themes to look out for during the year. So prior to joining Maybank, Chew Han has conducted equity research at various research houses that includes S&P Malaysia, Affin Securities, which is now known as Affin Hwang Investment Bank, and Paragon Research Malaysia. Since taking up the helm of a current role in late 2010, Chew Han has led the investment bank equity research team to achieve numerous awards over the years. This includes achieving the top ranking research team award in the Asia Money Brokers poll for 5 consecutive years between 2015 to 2019. Furthermore, Chew Han herself has also been voted as a top equity strategist in the same awards in 2016, as well as the top analyst for the construction and engineering sector in 2021. So before I'd like to pass on to Chew Han to present, I'd like to remind participants on a few housekeeping rules. Participants, if you have any questions regarding today's webinar, feel free to post your questions in the Q&A chat box below at the Zoom screen, and we'll respond to those questions at the end of the presentation during the Q&A session. So without further ado, I'd like to invite Chew Han to present on today's topic. Here you go, Chew Han.
Okay, hi, good morning, everyone, and I hope that you hear me well. It's clear. And thanks, Yong Shen, for the introduction, and Happy New Year for everyone. Seems like New Year has been so far away. In just the 22 days in January, I think a lot has actually happened in Malaysia as well as in externally. All right, in Malaysia, we saw the launch of the JSSEZ on the 9th. I think on the 7th, on the 7th. And just a couple of days ago, we see a new president in the US. So of course, obviously, this year is going to be very much an action-packed year as far as Malaysia and even globally is concerned. Action-packed in the sense that we have a new president in the US, which does not always follow script, and he actually speaks his mind. And secondly, of course, Malaysia very much into what I would call the 3rd year of the economic transformation. And also what is exciting is Malaysia is going to be the ASEAN chair for this year, which we expect about 300 over meetings to be held in Kuala Lumpur or in Malaysia in particular. And this will actually help us quite a fair bit in terms of consumption, in terms of maybe flights, number of flights, the tourism sector in that segment. So let me start off. Allow me to share a slide. Give me a minute, please. Okay, I hope you can see quite well from here. And I need to stop my video so that I get better quality bandwidth. Okay, essentially the title of what I'm going to talk about today is actually a volatile year. That's to be expected as what I've mentioned based on what is happening and what's going to happen this year. I'm going to talk about macro as well as equity. So there's 2 parts to it. I'll start with macro, I'll start with global, and then zoom into Malaysia. And on equity, I will actually focus on Malaysia. Now, global growth, what are we expecting this year? We are actually expecting sort of global growth to soften to below 3%. All right. Last year, our estimate was 3.2%. This year, we are looking at 2.9%. And this slight slowdown, all right, where is it coming from? From the US as well as China. Now, US, we do expect growth to soft land based on Trump 2.0 growth measures like deregulation to spur investments, and also what he has proposed, I think, during his first term to cut taxes, especially corporate tax rate cut. Now, for China, we are actually seeing signs of its growth stabilizing in the 3rd quarter of last year. And for this year, we forecast about 4% plus growth moving forward, not only this year, but moving forward also. coming from the impact of monetary and fiscal measures that they have announced very much in the fourth quarter of last year. Now, what will remain, what I can term as a bright spot is still ASEAN, and in the sense that we do expect ASEAN growth to be slightly slower, but then again, is resilient in a sense, all right? Of course, we do expect some moderation in Singapore in terms of growth this year, as well as Malaysia and also Vietnam. But we do expect pickup in Indonesia, as well as Thailand and the Philippines. Right, so ASEAN growth is going to be driven by a couple of factors. Number one is actually the E&E side, the electronic side, in terms of electronics rebound. This is actually an estimate by the World Semiconductor Trade Stats, in a sense that they are still looking at chips growth of about 11% this year, compared to this is coming from a strong growth last year of 19%, all right? And the other growth driver for ASEAN is essentially tourist arrival, or rather the tourism sector regaining to where it used to be pre-pandemic and even above pre-pandemic. And we can actually see some signs last year that certain ASEAN countries have already reached the number of tourists which they had compared to during the pre-pandemic. Now, ASEAN also seems to be benefiting from geopolitics. The US-China trade tension has actually led to some diversification in trade. If you look at this chart here, this is China imports, yeah? The share of imports from ASEAN has been growing in the last couple of years. And if you look at the bottom, which is US imports, the share of US imports from ASEAN has also been growing the last couple of years. Besides that, besides trade, ASEAN also benefiting from on the FDI side from the US-China trade tension in the form of diversion. All right, and you can see the chart on the left that quarterly investment numbers, FDIs into ASEAN 6 countries have actually been moving up, or rather on an uptrend. Now, of course, what's the wild card, all right? Very much, and I think every one of us will agree, is uncertainties in terms of policy under the Trump 2.0 era. Now, we take a look at what Trump has promised when he was campaigning, all right, last year. He was actually talking about 4 key things that he wants to address when he come on board: deregulation, immigration, tariff, and taxes. Now, all of these are very much more of the one that will actually have an impact on global trade and as well as global growth is actually tariffs. All right, and tariffs is essentially at that point in time, he was talking about 60% of all imports from China, as well as 10 to 20% from the rest of the world. This is actually based on our estimate last year, about third quarter of last year, all right, where US tariff on China, all right, as well as rest of the world. But on a very rough estimate, if Trump, we think that if Trump is to implement 60% tariff on China and 10% on the rest of the world, in the second year that it comes on board, we do think that US GDP growth will slow by 0.5% and US CPI will go up by 2.5%. So this is what we have anticipated based on what he has mentioned during his campaigning. But then again, we take a look right now whether that what he spoke about was more of a rhetoric or is it a reality. And I think he has actually spoken about 25% tariffs on China and Mexico. All right, that's to be effective. I mean, after he have come on board, he has spoken about 25%, and that's to be effective next month. Now on China, the tone seems to have softened a bit, but I think it's more because US wants to go into negotiation. They want to use it as a negotiation tool for China. All right. So in that sense, he didn't immediately implement the 60% on China, All right, he wants to use that as a negotiation tool, but we do think that over the course of this year, market will be a bit more volatile or jittery, and will be very cautious on what he intends to do with China or for China, right? Having said that, the other thing, whether he spoke about what was rhetoric or is it reality, is that the administration team of Trump 2.0, and the other is that we do think that we think that Trump may not eventually want to spook Wall Street or upset Wall Street compared to Main Street. I think we have seen the number of tech giants that actually appear was actually at his inauguration, and that speaks, the message that he's trying to send is that he is business friendly, right? So when we take a, one of the issues that Trump has talked about is he wanted to take a look at countries. He was actually targeting countries which have trade surpluses with the US. But I think in ASEAN, if you look at the chart on the right, with the exception of Vietnam, the other countries, their trade deficit, their trade surplus with US is actually very small out of total trade. So question is, will Trump look at or target ASEAN? We think that ASEAN we do not think so at this moment in time. All right, and as far as Malaysia is concerned, the country has also been taken off the currency manipulator watch list last year. And in fact, if you look at current account as a percentage of GDP, we are actually very, very small. All right, and the surplus of Malaysia trade with US is actually very, very small. So we do seem, or rather Malaysia do seem to be a bit more, protected in the sense in terms trade policy. Now let's move into Malaysia. This year, as I mentioned earlier on, we do expect economy the growth to actually come off a little bit. All right. Last year we were looking for 5.2%. And fourth quarter, I think some numbers have actually come out, and we do think that fourth quarter GDP will slow a bit to 4.8% growth. All right, that brings full year to 5.2%. And moving forward into 2025, we're looking at 4.9%, very much at the mid range of the government's 4.5% to 5.5%. Now, the 4.9% is going to be driven by, of course, the services sector, which is the largest chunk of the GDP contributor, and followed by the manufacturing sector. But on the demand side, all right, what's going to drive GDP is or economic growth this year will be demand coming from both private and public, as well as public investments. I'll go a bit more into that. Now, when we talk about consumption, budget 2025 has a number of measures to boost consumer income as well as spending. Number one is the first phase of the civil service salary revision that took effect in December last year. And then in February this year, we have the minimum wage hike. And of course, in terms of cash handout to the lower income household, it has actually been higher for this year. We also, budget 2025 also have personal income tax reliefs, as well as the introduction of EPF account 3 to allow flexi withdrawal. So that we think will actually help quite a fair bit in terms of boosting consumer spending for this year. Now, besides budget measures, all these budget measures, we also expect tourist arrivals to be higher this year. All right, and essentially also this is running up to visit Malaysia here in 2026. Now, in the past, when there is a tourist visit Malaysia year, we noticed that a year before that, all right, the tourist arrival, the tourist spending actually do go up in the run up, and we expect the same for this year as well. Now, the other thing is this year Malaysia is ASEAN chair. We also think that it will actually play a role in tourism, in the sense that the number of flights coming to Malaysia, and the other one is that the hotel spending and the F&B spending will actually help. What we understand is that there's going to be 300 World meetings this year relating to ASEAN, because Malaysia is the chair. So that will actually help to boost consumer demand for this year. Now, in the investment side, the approved private investments have actually been on an uptrend. All right, and that's 2023, and the target was 5% growth last year. So we'll wait for the numbers to come up, I think next month, next February or March. Do bear in mind this approved investment, but actual investments, that whatever that's in approved, we do see that the percentage of this being realized is actually very high. It can go up, range from 70 to 90+% in the past. And we do see that in 2023 it did grow, and we're waiting in first 9 months of last year also, it was actually on a growth trend. So of course, it came from both the foreign side as well as the domestic side. But what is encouraging is that domestic direct investments which had been sort of like stabilized or taper during the pandemic, has started to grow in 2023 and even 2024. So these are actually very encouraging sort of trend that we are seeing. And just take us, as we take a look at what has happened in terms of the economic transformation and the rationalization and all that, we do take a look at what has actually been implemented, and after about 2 years, 1 year plus after the Madani economy framework was announced. And essentially, we do see that there has actually been progress in terms of fiscal consolidation and reform, as well as there's taxes. And then I think the most important one is actually the diesel subsidy rationalization last year at around 95 by the middle of this year. All right, so we also see that we do expect that the budget deficit for last year, the government was estimating 4.3%. We do think that it can actually come in better than the 4.3% of government forecast. Now, we also see Johor Singapore Special Economic Zone. Eventually, the agreement was signed on early this year. All right, and the blueprint will be out maybe in the middle of this year. And essentially, this comes with incentives. And based on Kementerian Economy estimates, this is going to add about US 28 billion per annum to Johor's GDP and to Malaysia's GDP. Now, that's quite significant because Malaysia GDP, in current prices, is slightly below 2 trillion ringgit. All right. So US 28 billion enhancement contributes to about 6.5% enhancement to Malaysia's GDP. And if you look at Johor itself, in 2023, their GDP in current term was about 170 over billion. So this 28 billion US dollar translates to about 140 plus USD billion. So that sort and compared to their base of 170 plus, what I'm trying to say that the enhancement is actually very, very big to Johor, and also it will make a difference for Malaysia total overall. We also see, progress in energy transition. Last year, CREST was sort of launched, all right, for third-party access. And even I think right now we are talking about more on the LSS 5, as well as we understand that LSS 6 could actually be coming on board soon. All right, and of course, the focus is on a high value, high growth sort of investments. And we have seen upcoming will be the new investment incentive framework that's to be launched, I think also in second quarter of this year, which I think also it will target, there will actually be incentives for the E&E, all right. Of course, the whatever there's also been measures to raising income as well as to boost consumption in the economy. Now, so that leads me to this slide, which we actually are very excited to share, because what we have seen so far is that it seems that Malaysia is on the up, is on the third investment upcycle. In the first investment upcycle was actually in the late 1980s, when the government when the Promotion of Investment Act came on board, right? If you remember, or if you're as old as myself, you will remember that that was when the pioneer status, a lot of the tax incentives was actually came about. ITA and all that in promoted sectors, in promoted zones, all right. So after that, the second investment upcycle was in the late 2000s. That's where we launched the Economic Transformation Program, the Government Transformation Program, and the strategic, I think, reform initiatives, all right. And now it seems that we are on the third wave, all right. And this is actually, what has supported this is, of course, the framework, the Madani Economy Framework launch, of which I think the two biggest support is the NETR, the National Energy Transition Roadmap, as well as NIMP, New Industrial Master Plan 2030. Of course, supporting this will be the NSS, the National Semiconductor Strategy, that was launched last year, but I think that the details could be coming out very soon this year. And upcoming will be the Johor Singapore Special Economic Zone, which I mentioned just now. We think, based on our rough estimates, it will contribute about 6.5% to Malaysia's GDP. Now, just want to take a moment to talk about the ringgit. All right. The ringgit, the pain point of the ringgit the last 3 years is actually easing, in the sense that US-Malaysia interest rate gap has been narrowing because the Fed has been cutting, whereas Bank Negara is keeping the OPR. And our thoughts are that we think that Bank Negara will maintain OPR at 3% this year, whereas for the Fed FFR, the Fed fund rate, our in-house estimate is 3 cuts this year, totaling 75 basis points. But then again, I think the latest market outlook, market expectations out there is about 25 to 50 basis points cut. The ringgit has also been supported by Bank Negara's measure to encourage repatriation and conversion. That has also helped on the external reserves. So these are our other estimates or expectations in terms of key economic indicators. Just to highlight that for this year, in terms of fiscal balance, we are looking at 3.8% of fiscal deficit, 3.8%, and coming down to 3.5% next year. We do expect inflation to go up a bit this year. That's because also our economist has imputed some impact from the RON 95 subsidy rationalization. that's going to come on board in the second half of this year or from the middle of this year. But having said that, we need to watch out for that because it's widely known that the subsidy, the RON 95, is actually targeting the top 15% of individuals. But then again, there would be impact as far as the businesses and the industries are concerned. So in terms of overnight policy rate, we do expect Bank Negara to pause and maintain OPR at 3% for this year and next year as well. Whereas for the ringgit, we do expect a little bit of weakening this year. That's very much due to uncertainties of Trump policies. That's one thing. And actually, that's the key one that's driving us to estimate a slightly higher ringgit to USD for end of this year. All right. Whereas for crude oil, we are looking at slightly lower, 70 USD per barrel. Palm oil, we're looking at about 4,000 per ton. All right. Just also would like to take a moment to talk about this latest rule in US that came about last week actually, and it caused quite a lot of uncertainties, and as a result of that, some of the construction stocks and even those that are related to AI in the tech segment were sold down. All right, so I'll elaborate a bit on that later on when I talk about in the equity session, but just to highlight that this sort of policies coming from US, these are actually downside risks to Malaysia's investment upcycle this year. So, when people ask us, you're looking at 4.9% GDP growth and all that, what's the risk for Malaysia? What do you think of the risk for Malaysia? For us, the number one risk is actually the trade policies coming from the US. And I just want to highlight to you, I mentioned just now, end of this year, we're looking at ringgit to end at 4.45. All right, we do expect a bit more weakness in first quarter and second quarter, due to also very much related to US uncertainties on US trade policies. Our macro team do expect that Trump will actually act on tariffs and all that he will want to act on it in the first and second quarter of this year and probably make all this announcement, and then after that very much in the first half of this year. So that's on macro. And how does that translate to equity? So equity, we have seen a lot of news flows that created a bit of volatility in the last couple of months, and especially after in the run-up to US elections. That means it was in October, a bit of weakness, and we have been seeing that ever since now. So I just want to highlight a couple of things as far as equity is concerned. Because this is a year that we think equities will have to navigate on opportunities and challenges due to Trump. There will actually be opportunities for Malaysia on the macro side in terms of trade diversion, but more so for trade diversification. All right, what will help Malaysia is the investment upcycle that we are seeing, all right, as well as non-trade growth engines, including that of tourism and ASEAN economic growth. We will talk a bit about the key events to watch out for this year, as well as the 5 thematics. Our year-end KLCI target is 1740. That's based on 15 times next year's earnings. And very much the higher KLCI at 1740 compared to where it is today, below 1006, will be very much driven by the banks. Banks contribute about 40% to the KLCI weight. All right, so that's our key overweight. Having said that, we are also overweight on consumer, on healthcare, all right, and selectively on construction, oil and gas, as well as tech tech, we are more positive on the EMS segment. Other sectors like property, plantation, telco, and utilities, we are neutral. And our key underweight remains on the petrochem sector. Our top buys to mirror, our sector overweights are AMMB, CMB, Gamuda, YTL, Hatta Lega, and the rest. Of course, sales are actually, petrochem related, so it's Lotte. And we also have UPIX, EcoWorld International, Burma, DXN, MPM, and Central REIT, as well as ESG picks. So our house, Maybank as a house research house, we have actually started on ESG research during the pandemic. That was in 2022. So we are now into the 4th year of ESG research. We have developed our own ESG scoring for the stocks inside our under our coverage already. So among those that score high are like Allianz, Gamuda, IOI Public, as well as our bank. So I'll talk a bit more. So the question is, last year KLCI was up almost 13%. All right. But then again, somehow in October, it was actually disrupted by US elections, which was in the early part of November. And after, when Trump wins, there's a fair bit of uncertainty. Now, in the beginning of the year, or most of the year, the thematics that drove the KLCI was JS, SEC, and data centers. So as a result of that, the focus was on property stocks, on construction stocks, even utilities, and selected telcos. After that, when that came in 3rd quarter itself, we can actually see the banks started to move up, because naturally banks are picked, especially by foreign investors, because it's actually a proxy to economic growth, right? So the question is, can we repeat last year performance? Well, that's a question I'll probably take later on the Q&A. Now, so Malaysia was best performing in ASEAN, all right, last year in US dollar term. You can see that because our ringgit also gained against the US dollar. And if you look into the details of it, you can see that the ones that moved in the market last year was those in the mid caps, those under FPM 70, all right, and followed by the big caps, and the small caps, it gained just about 10% like that. So the focus was very much on this segment last year. Okay, so this is where this is actually a chart on foreign fund flows. We just look at the rate bars here. You can see that overall in the first 9 months of this year, there's been quite a fair bit of foreign net buy or foreign inflow into Malaysia equities. I think 3 over billion. All right, but as the run up to US elections started in October, and then US elections and all that, you can see that the fund flows have turned negative in the last quarter of last year. So as a result, that what was essentially an inflow in the first 9 months were totally reversed out, resulting in the 4 over billion net sell in the year itself. And this is actually a chart on cumulative foreign net buy, net sell. The red color chart is the red color line. You can see it started off the year as net buy, then somehow it gone up a bit, accumulated, it gone up a bit in August, September, and then totally it became net sell, towards the end of the year. Compared to 2023, foreigners were also selling 2 over billion. So last year represents the 2nd consecutive year where the foreign investors have been selling. Now, what this chart is very interesting on the bottom right, in the sense that, foreign participation in Malaysia trades, equity trade last year was actually the highest that we have seen in a very, very long time, at 36%. All right. So it also jives with, this, their net buy during the year, their net sell, and also the market in the first 9 months of this year, right? So that drew quite a fair bit of interest, foreign interest into Malaysia equity last year. So last year, foreign shareholdings in Malaysia market was up only slightly. I think it actually breaches above 20% sometime during the year, but it closed the year at 19.7%. And then overall, I think it was up just about 0.2 percentage points. Having said that, foreign investors were not just selling on Malaysia. In fact, their net sell in Malaysia last year was not as high as what they were selling in Vietnam as well as Thailand, but they were net buyers in Indonesia. And last year, if we take a look at what foreigners were selling, they were actually selling the banks like Maybank, RHB, as well as Public Bank. Also the selected plantation stocks like KLK, PPB, IOI, and other stocks like YTL, but that's because YTL has gone up so much the year before. Nestle, because I think the first 9 months the earnings weren't too good. All right. And of course, Petchem results wasn't so good. So they were buyers of utility like Tenaga, construction like Gamuda, WCT, and IJM. In fact, Gamuda was number 6 in top buy. All right, WCT at 11 and IJM at 13. And others like Malaysia Airports, Top Glove, Bursa, Sunway, and 99. So these were the interests of foreign investors last year. So maybe just to mention last year, I think I mentioned this during the macro slides. Essentially, CRESS was launched. All right, so it's actually a continuation of our policy initiatives last year. And our thoughts is that the market has actually reacted positively to all these policies that has been launched since the middle of 2023, but mainly in anticipation because these initiatives need time to materialize. So what the market is waiting for is actually the RON 95 subsidy rationalization in the middle of this year, as well as the impact from the civil service salary and as well as minimum wage hikes. All right, so this is important, the RON 95 targeted subsidy, the timeline, because it will offer validation in terms of incentives to bring down the fiscal deficit for Malaysia. I'm actually speaking, in terms of from the point or the perspective of investors, both domestics as well as foreign investors in Malaysia equities. So what are the things to watch out for this year? What are the investors looking for this year? Of course, Trump inauguration and his speech, and what's going to happen moving forward. Minimum wage hike from February this year, RON 95, 13 MP, and understand that 13 MP, the details or rather the launch date is probably in the middle of this year. All right. Our expectations, our house expectations is it's going to pivot towards more social economic focus. All right. During FEM as in Forum Economy Malaysia 2025 on the 9th of January, which Maybank co-hosted, the economic minister did say that 13 MP will be more, it will be radical. All right. It will be radical and it will be very different from all the other earlier Malaysia plans. And the focus, number one focus seems to be on talent. And he also talked about in terms of talent, the focus will be on education, on skilling and upskilling. So we do need to watch out for that. In terms of, we do also, despite, the focus on social economic, on talent and all that, we also think that there could be, in terms of infrastructure, it's mainly more towards sort of like also tweaking towards the people type of projects, like for example water and flood mitigation, energy transition projects, and even public transportation. So we think that the shift, or rather the focus for infrastructure will be towards that. But of course, I think that PFI, PPI, or PPP, public-private partnership projects will come that form of financing will actually be prominent in the upcoming 13 MP. All right. So the other thing to watch out is the new investment incentive framework. I think earlier on, the expectations is that this will come on board in third quarter. But at the FEM 2025, the Deputy Meaty Minister has mentioned second quarter of this year that they are targeting to launch this. Other key events to watch out is, of course, the yearly budget, all right, as well as maybe Sabah elections. So Sabah elections must be held by the 9th of December this year, latest, all right. And we do expect maybe quite a fair bit of infra spending to be to feature in Sarawak. So we have 5 themes for investors this year, balancing external disruption and the domestic tailwinds. All right, so the strong approved investments 2 years ago should start to translate into realization this year, with state-driven activities to also spread beyond the 3 states in focus, which was in focus last year. The 3 states are Penang, Johor, as well as Sarawak. So we do expect also corporate restructuring to create some interest in the market. Theme 1 is actually on external disruptions. Malaysia could be a beneficiary of trade, continued beneficiary of trade diversion and also trade diversification. So sectors in play which we are recommending to investors include commodities, oil and gas, plantation, and tech. All right. So we are talking about China +1 BRICS and FDI flows. It will actually benefit contractors, the ports, whereas Trump's higher tariff could be positive for the commodity space. The stronger US dollar could actually be positive for the exporters, which includes the tech sector as well as CPO. Now, theme 2 is actually on domestic-centric consumer drivers. And I mentioned just now earlier on disposable income under budget 2025. There are measures to boost disposable income, to boost consumption, as well as higher tourist arrival will actually support that. All right. So in that sense, in addition to that, a stable interest rate environment could help to ensure decent loans growth while maintaining robust asset quality. So sectors that we are recommending is in this theme would be banks, consumer, tourism, as well as the REITs. All right, REITs is also because of turnover rent coming from the higher consumer spending. The third theme is actually very much state-driven activities. Here we focus on 3 states, Johor, Sarawak, and Penang. All right. So whatever that has been signed on the 7th of January, JSSCC, we think it will continue to benefit the property sector as well as construction. All right, in the first wave, but eventually it will actually benefit a whole range of economic sectors. Sarawak is actually becoming the region powerhouse, and we do expect more news flow also coming on this front. So we are promoting some Sarawak stocks for this thematic, but the biggest one, of course, exposure is of course AFIN, and followed by Giant Mata Sarawak. Penang is keeping its name as Silicon Valley of the East, and we have seen that the first of the LRT Penang LRT construction work packages being awarded on the 13th of January, and I think also that the LRT project will extend towards the mainland, so this will keep the excitement on the construction sector for this year. Right, these are basically numbers. I'll skip that. And fourth theme is on investment realization. All right, I mentioned just now record highs of approved investments in the last 2 years. We do expect realization in this year. All right, and essentially the key beneficiaries are the tech, construction, and the industrial property segment. Of course, the consumer side as well. Consumer side more so, later on, because job creation should actually lead to better income accumulation as well as spending power. The last thematic that we are promoting is actually on corporate restructuring, more towards GLCs. And here we think that Axiata, we do think that this year we should see better profit coming from them after the merger that has happened 2 years ago, as well as we do think that SP30 numbers will actually start to move up even higher, right? Coming from a new management. Okay, where are we now in Malaysia in terms of valuation? When analysts talk about equities and all that, at the end of the day, it boils down to valuation. Right, so where we are right now, if you look at the chart on the bottom, on the top, it's essentially we are trading, Malaysia equities are trading at about 15 times on a 12 months forward PR or at the end of last year. And it used to trade about +1 standard up to, or even above 1 standard deviation. This the red line is a +1 standard deviation. So and the mean is 16 times. So where we are right now, especially with the sell down below 1,006, I think we are trading at about 15 times, which is minus 0.5, 0.6 standard deviation below mean. All right. So our year-end KLCI target of 1,740 packs it at 15 times. All right, on the assumption of 8% earnings growth for KLCI stocks. This is our estimate for our research coverage, 13% growth this year, as well as 11% growth next year. And for the KLCI stocks, we are looking at about 10%, 9.6% earnings growth this year and 9.4% growth next. 9.6% growth last year and 9.4% growth this year. I've skipped that. And this is where we are recommending, in terms of sector weights for investors. We are overweight on aviation, on banks, on construction, consumer, gaming, healthcare, as well as for oil and gas in the FPSO segment, in REITs, in the RE sector, as well as in technology, EMS, and software. We are neutral on automotive, also in gloves, media, plantation, ports, as well as property and the tech semicon segment. We are also neutral on telecommunication sector as well as utilities. And lastly, we are underweight on petrochem. So this is just our research universe, and I'll share this slide with Bursa. That's it actually for my presentation, and I'll pass it back to our moderator for the Q&A. Thanks.
Thank you, Chew Han, for the insightful presentation. We'd like to open the floor to questions from the participants. So participants, if you have any questions, please type in your questions in the Q&A chat box below and we'll respond to those questions. So we have our first question here. So someone asked about why does Maybank have an overweight stance on the oil and gas sector, especially for the FPSOs, when considering the Brent price forecast is about relatively low at about $70 per barrel. Perhaps Chew Han, you could answer that. Yes.
Sorry, mainly it's because we think that a lot of the this has actually been contracted in a sense. So the earnings are already there, and it should actually be reflected in terms of earnings growth for this year.
Okay, thanks. So we have another question here. So someone asked about, besides IPO stocks, like why the smaller cap stocks did not perform well last year?
Very simple, because the last year there was actually a very good that was actually a very strong investment thesis for Malaysia, in the sense that it attracted a lot of attention from overseas. So you can see that foreign trades have actually gone up last year, right? And of course, that has actually helped to boost equity trades. And I think Bursa last year, the average equity trade was about 4 billion, if I'm not mistaken, last year, ADV lah. All right, and a part of this, out of the 4 billion ADV, as in average daily trade value, 36% participation from the foreign. So when foreign take a look at Malaysia, some of the small cap stocks are too small for them in their portfolio. In the sense that, you know, unless that small cap stock actually has a 30% growth story, all right, I'm just using 30%, for example. But what I'm trying to say is, unless that small cap has a very, very strong growth story to become a middle cap, mid cap, or even a large cap, unless that is it, then their focus tend to be on the big cap stocks. All right, so that's why you see stocks like, you know, this so that's why you can see that their focus has been very, very much on the big caps. If you recall, on certain years, when foreign participation were low, all right, Malaysia's small caps actually performed in those years, and even the big if you take a look at history, so to answer your question, why small cap did not perform that well last year, it's also because very much due to interest in Malaysia stocks from the foreign side that has actually helped to support the upside for the big caps and even the mid caps. I hope that answered the question. Your question.
I see. Thanks for the response. So we have another question here. Is that this participant asked about whether 2025's market performance will be able to replicate 2024's. Would there be a possibility for it to replicate?
Okay, what I would say is that our year-end target is 1740 somewhere. Yeah. Yeah, 1740 lah. The upside that we are looking for is not more than 10%. And that's what very much because of external uncertainties. And we have seen it, you know, in January itself, or at least until the 21st of January, that foreigners have actually been selling Malaysia. I think the net sell month to date is already 2 billion ringgit. That's 2 billion ringgit. To me, I think it's quite big in that sense. So having said that, this is KLCI target, all right? KLCI means it's the top 30 stocks. So we think that the shift of investors, especially local investors, could be towards the mid cap or the small caps this year. So as a result of that, FBMSC could actually be the focus this year again, all right? But I think it's also going to be very selective if there is a growth story, growth proposition, and if valuations are still cheap. I'm talking about stock by stock, yeah. Valuations are still cheap, or rather the valuation can that the important thing is there is growth and valuations are not expensive. I think the focus will be on this segment this year.
I see. Okay. Thanks. So the next question is that would there be any risk towards the Malaysia data centers or perhaps the tech sector, considering that Malaysia is labeled as a tier 2 country?
Okay, this is very interesting. I wrote about this on today, maybe yesterday or the day before. Now, this one is based on an executive order signed by Biden on the 13th of January. All right, and that order is called interim final rule. It's not a final rule, it's called interim final rule. And the title is AI diffusion. All right, and that rule is supposed to be effective on the 15th of May 2025. So there is 3 months for industry players maybe to, or rather the authorities to speak to the industry players to get their feedback. All right. Now, what is significant about that is that, you know, US has been coming out with rules, all right, on AI. It has come about many, I think since 2023 or 24. And this is actually whatever that came on board on the 13th of January is in addition to what they have already put in as a rule. So as far as Malaysia is concerned, there is actually this rule, the one that they signed on the 13th of January, includes, you know, includes a segment of data center. That's where Malaysia wants to be in terms of Malaysia wants to attract AI data centers. And also we have seen, you know, people like who are Amazon, people like Google and Microsoft, their investment pledges in Malaysia. All right. So, but having said that, if you take a look at the rule itself, whatever's been there, they say that if you want to continue buying chips from US and its allies, AI chips, you must, in terms of setting up data center, you must set up your total processing power overall. No more than 7% can be allocated to one single country. All right. And no more than 25% of your total processing power globally can be located in countries outside US and its 18 key partners. Right. So that's the rule. So obviously, you know, the question is the 7% rule. How will it affect Malaysia? All right. And I think because of that, there has actually been a lot of sell down in you know, those stocks related to data centers in Malaysia. But if you take a look at that, you know, will Malaysia, you know, the location in Malaysia make up more than 7% of total TPP? Based on our estimate yesterday, when we take a look at the investments by Google, by AWS, as well as Microsoft into Malaysia, their total investments in Malaysia makes up no more than 3+% of their total investment worldwide. So of course, you know, that's total investment. We had to find out what is their total processing power, which we don't have that data. But I'm just thinking out loud, you know, we don't think that the total TPP of these players outside their jurisdiction, I mean, in Malaysia will be more than 7%. So that's one thing. Now, the second thing is, of course, we also need to consider that the growth of data center in Malaysia is both because of the need for cloud computing, cloud storage, and of course, AI-driven, and for AI, all right? So the ones that are for just solely for cloud and cloud computing, storage and all that doesn't seem to fall within this rule. But of course, the argument is moving forward, you know, Malaysia wants to attract AI data center. So, you know, taking these two into consideration, we think that the impact is actually, we don't think Malaysia will be significantly impacted by this new rule by the US. And I think also, so as a result of that, you can see share prices, you know, as people started to analyze more into it, and, you know, estimate the impact, I think share prices of those stocks have actually moved up yesterday and the day before also. But having said that, this is a rule that will only be implemented on the 15th of this year, 15th of May this year. There's 3 months for industry feedback. All right, and it's our view is that you know, it could eventually have some tweak to it because that was done during Biden and now it's Trump. So there could be some change to the rule as well eventually. So as far as data centers and, you know, construction are concerned, we have maintained our overweight call on the construction in Malaysia. I hope that answers the question. To summarize it, we don't think that the impact is big to impact data center investments in Malaysia.
I see. Okay, thanks a lot for the response. Hopefully, okay. So the next question we have here is that, we're considering that U.S. President Donald Trump is planning to focus on oil drilling again. What is Maybank's view on the effect on what's Maybank's view on the effect of Brent price, considering that the oil market has been oversupplied?
Yeah, and probably he's going to Trump is talking also about self-sufficiency and all that, and definitely he's going to sort of, in terms of fossil fuel in US, we do think that it will go up, all right, the production, and we have imputed some of it into our estimates. We do expect crude oil price this year will be lower, so we are looking at 70 average for Brent for the
I
year.
see. Okay, thanks. So we have another question relating to the construction sector over here. So this participant asked about what else can we expect to look for into the construction sector, considering that we have already announced projects with most of the projects are in Malaysia related to data centers. So what else can we anticipate?
Actually, if you look at it, last year there were a lot of hoo-ha on data centers. And this, I think it also started from the end of 2023, but last year there was a lot. But if you look at it, based on the construction order book, as I'm just talking about the bigger players, construction order book, less than 10% are data centers, with the exception of I think one big player as well. That one is about 21%. But stocks like the players like Gamuda and IGM is less than 10%. In fact, I think it's about 5% to 6 to 7% only. So it's actually small. All right. So but of course, last year the data center play also benefited the middle tier players in the construction sector. So what can move? What can the construction sector expect moving forward? Our view is that we think that data center jobs will continue to come in. Malaysia will continue to receive data center type of jobs. But of course, maybe there could be a bit of a delay in terms of those especially hyperscaler type of investments in Malaysia, pending clarity on the US side. But having said that, Malaysia needs data center also because of its digital transformation. So we don't think that data center jobs will be like suddenly stop in that sense. Of course, the pace of it may actually taper, right? So what can actually drive the sector? I think a couple of things. We must remember that last 2 years, FDIs have been high. Those are approved FDI. So we do expect it to be translated into realization these 2 years, this year and next year. So that will actually continue to support jobs related to industrial buildings, related to E&E manufacturing, related to warehousing and all that. So that provides support. And the other one is actually infrastructure to support some of the economic plans that has been made. For example, JSSEZ, all right? JSSEZ has a development infrastructure fund of 5 billion. This 5 billion is not a cap, in the sense that if it's not enough, it will be topped up. Now, and what do you then you ask yourself, what is needed in Johor? Definitely, I think the public transportation system needs to be upgraded, all right, because JSSEZ now the area is actually quite wide. And also, you're talking about the RTS completing next year, end of next year. I think it's already out in the news, all right, that Johor is looking for either for ART, LRT, that sort of the public transportation system. And I think also there could actually be jobs related to water infrastructure in Johor. Right, so budget 2025 actually has some allocation for CERTILI, and I'm sure there will be other treatment plants that can be upgraded or new ones. And also bear in mind, there was an announcement last year of a 4 billion sort of infrastructure support. I think it's related to water, for the Korean integrated KIGIP, the one in Perak. So, I do think that infrastructure jobs will continue to come about and to support the construction sector. Yeah.
Okay, thanks for the response. So we have one question here which is related to Indonesia. So the participant asked whether, because Indonesia Stock Exchange, they saw a net foreign fund inflow for the last year, but despite that, its domestic currency, the rupiah, has weakened a lot as compared to against the USD. What is Maybank's forecast for the Indonesia rupiah in 2025?
I think we have it here. Idea. Last year and this year, a bit of a weakening as well. All right. I hope you can see here. A bit of a weakening as well. But as I say, much of this is also due to trade. That uncertainty in external global trade policy, or rather policy coming from the US. All right, so we are looking at 16,500 IDR to USD for year end this year.
Okay, thanks for that. So this is the last question for today's webinar. So the question is being asked that since Petronas has resolved issues with the Sarawak government, so would that mean that oil and gas projects, oil and gas jobs will move faster rather than it seems stagnant a bit at the moment?
Yes, we are hopeful that it will move, it will recover some pace. All right, following from what has been happening now. But I think at the end, the other point that we are also looking at is, of course, in terms of capex by Petronas alone. We do think that it will actually come off, because of this. But having said that, I agree that the pace of pickup in awards will actually pick up this year also. Pick up from now on.
Okay, so I think that's the last question for today. So I'd like to thank Chew Hann for the very insightful session. So hopefully, 2025 will be another bullish year for the equity market, especially for Malaysia. Hopefully, you could even replicate or outperform 2024's performance. And furthermore, I'd like to thank all the participants who attended for today's session. And then Happy Chinese New Year to those who are celebrating, and we look forward to see you in the next webinar. So thank you everyone once again.
Yeah, thank you everyone. Happy Chinese New Year for those celebrating. Thanks. Bye.
Thanks, Chew Hann. Thanks. Bye everyone.